In this video, I'm going to show you how to perform top-down analysis like a true professional trader. But before we begin, I want us to first understand why top-down analysis is so important. So first of all, what exactly is top-down analysis? Top-down analysis is simply the process of using a higher time frame context to frame or guide a lower time frame trade. Most times the market is already telling us a story, but it's only when you truly understand top-down analysis that you can fully grasp the storyline behind price movement, which means you have to use the story the daily chart is telling you to clearly understand the story the 4-hour chart is telling you. And that in turn helps you understand what the 1 hour, 15-minute, and 5-minute charts are also saying. So let's say you're bearish on the 15-minute chart, but the daily and 4-hour charts are clearly bullish. There's a high tendency that you'll most likely lose that trade. However, if the 15-minute chart is bearish and the higher time frames also align with that bearish sentiment, then there's a much higher chance your trade will be a winner. All right, enough of the talk. Let's get practical. Let's look at the 3 trades I took this week so I can show you the reasoning behind each one. I shared all of them for free in my Telegram. Links in the description. Now let's get started. This was my first trade of the week, and it ended up being a 2% win. Now let's walk through my thought process before taking the entry. I started my analysis from the daily chart, and the first thing I noticed was that price swept below the previous candle's low. So coming into that day, I was clearly looking for reasons to sell. Next, dropping down to the 4-hour chart, I spotted a bearish, unmitigated fair value gap. And since my bias for the day was bearish, I expected that fair value gap to hold price. As soon as price returned to that fair value gap, I switched to the 1-hour time frame to observe how price came back into it. Was it corrective or impulsive? On the 1-hour chart, it was very clear that price moved back into the 4-hour fair value gap correctively, which is exactly what you want to see before taking a trade. Now moving to my entry time frame, which is the 15-minute chart, I saw something very interesting. Price created an SMT divergence right after tapping into the 4-hour fair value gap. Then it broke a minor structure and left behind a fair value gap. That was my entry point. I took my trade from that fair value gap, placed my stop loss just above the high, and set my take profit at a 1-to-2 risk to reward ratio. And as you can see, take profit got hit and everyone smiled. Now let's move on to the second trade, which was also a 2% win. This is the AUD/USD chart. I started my analysis on the daily chart as usual. Here we can see that price was pushing down. So for that day, I was looking to sell. Now, where would have been the best area to start looking for a sell trade? Right at this fair value gap. So I waited for price to come back to that fair value gap on the 4-hour chart. Immediately after price returned to the fair value gap, I noticed that it came back correctively, which means price didn't leave any opposing fair value gaps unmitigated. The only bullish fair value gap it left behind had already been mitigated. That was a wonderful sign that the daily fair value gap might potentially hold. Next, I went down to my entry time frame, the 1-hour chart. I noticed that no opposing fair value gap was left unmitigated there either, which was another great sign. So as soon as price gave me this bearish 1-hour fair value gap, I took my trade. My stop loss was placed 5 pips above that high, and my take profit was set at a 1-to-2 risk to reward ratio. And as you can see, take profit got hit. Now for the last example, this was a minus 1% trade. I followed the exact same principles I used in the previous 2 winning trades, which just goes to show, no matter how good your strategy is, you will still lose sometimes. This is also the AUD/USD chart, and it happened a day after the previous winning trade on AUD/USD. On the daily chart, price tapped into the fair value gap and rejected it, which made it clear to me that these lows would most likely be targeted. Moving to the 4-hour chart, price left a clean 4-hour fair value gap, which I felt would probably hold. As soon as price came back into that fair value gap, I dropped down to my entry time frame, the 15-minute chart. There, price formed an SMT divergence and left behind a fair value gap. So I took my entry right from that fair value gap, placed my stop loss just above the high, and set my take profit at a 1-to-2 risk-to-reward ratio. But as you can see, this trade hit stop loss. For the week, I ended up taking 2 wins and 1 loss, which still put me at a 3% profit. If you'd like to learn more about how I analyze the market, I have an ebook that explains everything in detail. You can find the link in the description. If the video was insightful, give it a thumbs up and subscribe. See you in the next one.